American Airlines just reporting. Phil LeBeau has those numbers. Phil, good morning.
Hi, Becky. For the third quarter, American Airlines reporting a smaller than expected loss of 17 cents a share. That compares with the street expecting a loss of 28 cents a share. Revenue of $13.69 billion, just a smidge higher than the street. But then when you look at the numbers within the numbers, there was nothing to write home about with this quarter. Due to operational issues and weather in July, they didn't swing to positive unit revenue until September. As a result, revenue per seat mile in the third quarter down 1.9%. Cost per seat mile up 3.9%. Pre-tax margin negative 1%. And all of the segments, when it comes to revenue in the quarter, they were negative year over year. Domestic revenue down 1.6%. International revenue down 5%. If there is a piece of bright news within this report, it's the fact that Q3 total debt is down to $36.8 billion, down another $1.5 billion. Remember, their target by the end of 27 is to have their total debt under $35 billion. So they're on pace for that. But within the quarter, nothing to write home about. Q4 guidance, EPS of 45 to 75 cents a share, well above what the street's expecting at 31 cents a share. Q4 revenue guide of an increase of 3 to 5%. For the full year, American expects EPS of 65 to 95. That's well above the street estimate of 43 cents as of this morning. And then finally, for all of 2025, American Airlines expects free cash flow of over $1 billion. We will be talking with Robert Isom, CEO of American Airlines, exclusively coming up here in about a half hour, guys. We'll talk to him about the challenges in the third quarter and the broader question of how American swings to profitability, which is their target, obviously, and then grows from there to start to catch up with the gap that's developed between them and some of their competitors. Guys, back to you.
Yeah, and Phil, it looks like the street, at least at this point, is maybe playing off of that increased profit outlook for 2025. You see the stock up by about 2.25%. Yes. So kind of hanging its hat on the promise of what's to come.
Yeah, and the fourth quarter, I mean, look, the third quarter, you don't want to have a repeat of that. They are optimistic about the fourth quarter and some of the changes that they're making, both in terms of attracting premium and corporate customers. They continue to work on what happened a couple of years ago where they changed the distribution channels, lost a bunch of business. They're still working to get some of that business back. They've come a long ways, but they still have a ways to go. We'll talk with Robert Isom about that in about a half hour, guys.
I mean, they're right. The stock's right where it was in the pandemic. It's really staggering, basically. If you look at long-term chart, while United, as you mentioned, some of the competitors, like United, probably trading at 2 or 3 times where it was at this level. What's been the problem, Phil, exactly?
A couple of things. One, they came out of the pandemic with a massive amount of debt for all of the aircraft that they had ordered and had acquired. Now, a lot of that's unencumbered as they've paid down that debt. I think at one point, guys, it was like $54 billion. Now it's down to $36 billion. So they've been steadily cutting into that debt. That has, however, limited their ability to send it to the bottom line, to increase profitability. And they know that. And they realize also that the market is shifting towards more premium revenue is where the airlines need to be. And they can do a much better job in that front. We'll talk with Robert Isom about that.